morning and welcome to our daily morning trade setup, which is all that you need to know to get a fair idea of how the Indian markets might get impacted each day. I'm Niraj Shah and let's get straight to it. Start off with the US markets, and they came off like a pack of cards in trade yesterday. But what this effectively shows is the kind of roller coaster ride that the US markets have had, isn't it? They're down one day, up the next, and down the next day as well. And with the fall that we've seen overnight, they've erased practically all the gains that they had, which came in on the previous day. So the roller coaster ride in the US market continues, but more importantly from today's perspective, they have corrected and therefore might have an impact on sentiment and prices as well. Asia is showing signs of that already, because almost all the indices which are on are correcting. Hang Seng is down about 2%, Nikkei is down about 2.86%. I must say though that the Chinese markets are a lot more well behaved than the rest of the markets. The Shanghai is down just 0.9% right now, and as you can see, it's almost back to the pre-outbreak levels. So the world over there are issues, but the Chinese markets are relatively better off in the last few days compared to the rest of the markets. But you would have to say that there is pain in markets by and large. The other two very key monitorables are what's happening to gold as well as crude. And the OPEC decision yesterday, but you can see that the pain around crude continues. 1.5 million barrels per day cut approved, but there's still some slip between the cup and the lip. Russia has to give it some permissions as well, but down about 2% for crude as we speak. So crude prices haven't quite risen, but gold prices continue to find favor, and the safe haven qualities help gold rise another 5% in the last 5 days alone, and up in trade yesterday as well by a couple of percentage points. But mind you, from an Indian market watcher's perspective, the SGX Nifty indicating a start which is in the red, and this shouldn't be surprising, not just because of the global factors but also because of the developments that have happened yesterday around Yes Bank. Though you would say that a lot of people would argue this was probably the last resort of sorts, but we need to very closely monitor the collateral damage caused by the Yes Bank situation. Hopefully it gets contained. There's a lot of chatter around what the government and the Reserve Bank of India can do in the very near term in order to help sentiment, but I think time will tell. And frankly, that remains that key stock to monitor in the session today, and that is Yes Bank. Remember, went up in trade yesterday. The market red position limits haven't still gotten out, so it's still in the F&O band, but we'll likely see a sharp reaction downwards today. Almost all brokerages, without exception, have a negative view. The quantum of damage that they believe the stock will see is differing, but almost everybody has a negative. A couple of notes like JP Morgan, etc., have said that the target is 1 rupee. Morgan Stanley maintains it at 25 rupees, but says it needs to be monitored as to what happens to Yes Bank and whether the bear case scenario of higher capital infusion plays out. It's under moratorium, and all of those factors could likely impact the Yes Bank stock in the session today. So very important stock to monitor. Also important to monitor State Bank of India. And again, the views out here are quite frankly diametrically opposite. One note that I read said that they expect both Yes Bank and SBI to see a sharp downward reaction. I think Kotak, if I'm not wrong, is maintaining still a positive view, because they are saying that the outcome is not as bad as they would have otherwise thought, simply because of the fact that buying a stake into Yes Bank and becoming a co-owner might have been even worse for State Bank of India. So the views are differing, but let's wait and watch what happens to this stock in the session today. Remember, late last night, they've approved all opportunities, investment opportunities into Yes Bank, and I fear that the sentiment linked collateral damage that could come in to some of the other NBFCs could also, and banks could also be interesting. So the likes of Piramal, RBL, Edelweiss could well be the focal point today. I'm not saying that these entities are under as much pressure as Yes Bank are, but the market would want to take a cautious view on almost everything that is tier 2, and you never know the kind of reactions that these stocks will see. So likely watch out for reactions on these names as well. Frankly, it's all about Yes Bank in the trade setup today and in the trading day today, and the impact that and SBI and the financial markets cause. So let's wait and watch how this shapes up. Thanks so much for tuning in.